Hey everybody, welcome to This Week in Crypto. I'm Kevin MURCKO, CEO here at CoinMetro. We usually do this show on Fridays tagged with our AMA, but, well, we decided to switch things up. So in the next 5 to 7 minutes, I'm going to go through the top 5 pieces of news that were curated by our elite Telegram group over the past week, or at least since last Friday, and go ahead and give you a comment on each. Let's see what news has come out in the past few days. Let's see if it's interesting or not. Let's take a dive. So number one on my list of 5, we have Bitcoin hits 100,000 on Binance. Didn't actually hit 100,000 on Binance, obviously. Reading through the article here on Trust Nodes, the author says that it's clear what happened in that somebody cleared through the book up to 100K and then, dropped and pulled the floor out. I don't think it's that clear. What this shows is, I think CZ mentioned that they had price bands in place. Obviously, those price bands didn't work. There are many ways to protect against market moves like this. Obviously, none of those protect, either they don't use any of those protections at Binance or they simply did not work. What happened here is essentially, pricing wasn't coming into the book, basically. I don't think anybody bought all the Bitcoin in Binance's book up to 100K. That seems a bit ridiculous. Basically, what I would assume would happen is that, the book went blank. For whether a nanosecond, a second, whatever it was, and the first orders to come in and repopulate that book were probably old standing client orders. Somebody probably had this order in for quite some time. It populated and caused probably a very small partial fill of that order, and that's why it painted on the chart. You see these across. I've seen these in FX, I've seen them in stocks, I've seen them in bonds, I've seen them in everything. Obviously, the more illiquid a market and the less regulated a market, the more you're going to see these type of things. This, however, in what's supposedly the most liquid exchange on the planet in terms of crypto, makes me wonder. Also, they took away the candle afterwards. Does that mean that nothing was actually executed? Was it a complete error? Obviously, Binance is not known for their transparency, so we don't have much information. Had we had more information, I guess people would stop speculating on exactly what happened. So CZ, if you're listening, come on, bro, spill the beans. If it was a technical error, tell us it was a technical error. Because taking a candle off a chart, if anything was actually executed, not the most transparent thing to do in the world. Okay, moving on to our second news story here, 2 on a list of 5. This is regulatory clarity leads to surge in institutional crypto investors coming through us on Cointelegraph. I think I've heard somebody say this every day for the past 3 years, and I'm kind of tired of hearing people say it. Regulatory clarity obviously will lead to more institutional investors because some institutional investors either need to or just prefer to wait for regulatory clarity. But it's not like if regulatory clarity happened tomorrow, every institutional investor would be into crypto, right? You still have to have a pretty high risk tolerance to get into crypto. Thus, at the end of the day, regulatory clarity isn't going to change that. I think that stories like this are a bit stupid in the sense that, look, institutional investors will always have a small portion of their book in highly speculative, high-risk assets. At least most institutional investors will. And to be honest, in the last 10 years, I don't know of even in the last 30 years, I can't really recall a high-risk, risk-on asset like crypto. Whether you're talking about Bitcoin, we're talking about Ethereum, whether you're talking about any of the majors that exist in this market. So regulatory clarity will obviously bring in new players, but it's not like it's the same thing. It's the same people that have been saying, when there was a regulated custodian, that's going to make a difference. Did it? If you didn't hear the grasshoppers' little chirps, no, it didn't. So moving on to number 3 on a list of 10, we have Congress people call on IRS to take it easy on taxing staking rewards. Congress people. People in the Congress. Again, from Cointelegraph. So asking the IRS to take it easy on rewards made from staking. Now, it's almost everything in crypto you can kind of relate back to traditional markets in some way, shape, or form. We're not really creating new asset types because they're just classifying crypto into specific asset baskets. There's lending in traditional markets. There's obviously borrowing. There's obviously margin trading. All these things generally already exist. However, here, staking obviously, doesn't really exist, or we don't call it staking, at least for the most part, when you talk about traditional assets. So what is staking akin to? Well, you're putting up something and you're getting something in return. That sounds like interest to me. And now Congress is, well, some people in Congress are asking the IRS, you know what? While it may look like interest to you guys, calm down on taxing it so much. And I guess probably why they're saying that is that, well, crypto's volatile, right? So what happens if you get taxed? You normally with interest, you get taxed at the end of the year based on the amount of interest you receive. But that interest is, interest you received in US dollars or euros or whatever. It's fairly easy to make a conversion. Here, when are they going to tax you? On when the interest was received or at the end of the year? What happens if the interest you received and spent that was given to you on January 1st was worth 300 times less than the actual value of that asset that you received that interest in come the end of the year, come December 31st? What do they do then? So I think definitely the IRS needs to take a look at this in terms of how they actually find the value date. But in terms of how it's taxed, man, it's interest. And I think that's how they're going to look at it. I don't really see them doing it any other way, at least in the longer term. Moving on to our next number 4 on a list of 10 here. Activity on Bitcoin regulated futures exchanges has never been greater. Yeah, but it's also been pretty small throughout. So it's more, I mean, in general, in terms of other markets, it's been relatively small considering that many of these are synthetic markets. And well, they could be potentially much larger. So the activity is larger. That's good. We had a story earlier today. What was it? That regulatory clarity was going to bring in institutional investors. Where do you think those guys are going to go? On Binance? No, they're not going on Binance. I answered my own question. Where they're probably going to end up is going to be on something like the CME. They already know how to trade a future. They already have an account. Well, it's easy for them. It's a button press. They don't even button click. They don't even need to do anything extra. It does make sense that they're reaching all-time highs. Not to mention, obviously, we've seen this peak, this nice pop in Bitcoin prices over the past week and a half, 2 weeks now, which is definitely corresponding to higher volume. Activity, I guess I would say, what are they defining activity as? I'm just looking all-time high. Futures market is an all-time high. If that's based on dollar value traded, well, obviously Bitcoin has popped about 20 to 25%. So maybe that's why we're seeing these all-time highs hit. I would expect those all-time highs to be broken many, 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 many more times in the future. It just goes to show that when people get real interested in Bitcoin, when the price is going up, and they call us immature. Okay, so moving on, last news, number 5. Oh, looks like we're getting some type of ad here. I'm just gonna go ahead and knock this one out. We don't need to pay attention to this anymore. So moving on, we have DEX volumes made up almost 4% of central exchange volumes in July, a new high. So DEX volumes are increasing. Well, so is DeFi. DeFi generally happens between DEXs, so that kind of makes sense. DeFi, a lot of that bubble is probably going to blow up in everyone's face. But it goes to show that when new technology comes out and it's interesting or it's just quirky, people tend to run to it. I don't know if this is a pattern and we're going to see this over time, or this is just something that's happening basically because of that DeFi bubble. When the DeFi bubble pops, and it will pop, doesn't mean DeFi is going away. DeFi in and of itself is a great thing. Decentralized finance, awesome. But the DeFi we have now is kind of like saying raising money on blockchain is awesome. Obviously, ICOs popped, burst, that bubble's gone. So I think the same thing is going to happen with DeFi in general. But it goes to show that, you make something novel, you put it out there, the crypto market will still jump on it. ICOs might be dead, but that the nature of why the ICO worked is still alive and very alive in the crypto community. Okay, guys. 8 minutes, went a little over my 7-minute commitment. Sorry about that. So that was This Week in Crypto. This week, guys, this week being the week of August. Well, today's August 5th. I don't know, the week of whatever, August 3rd, I guess. But anyway, join us next week. Please subscribe if you haven't already to our channel. Go ahead and click the nice thumbs up or heart button, whatever you're looking at on whatever social media network you might be on. We're going to do this every Wednesday. On Friday, don't miss out at 3 p.m. Estonian time. That's 3 p.m. GMT plus 3. That's 12 in the afternoon GMT. We do our AMA. We do it every week here at CoinMetro. Ask me anything. Literally, ask me anything. Okay, that's it for me. See you guys. If you want to chat or ask me a question, you can do so right on Twitter or Telegram at Kevin MURCKO. So see you guys. Cheers.